The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And our stock of the day is Boss Energy, this after it's beaten its FY25 production and cost guidance. However, the company's flagged potential challenges in hitting its nameplate capacity at its Honeymoon uranium project, with drill results suggesting less continuity of mineralisation and leachability, it says, which it says could affect future output targets. Its Honeymoon project in South Australia has seen quarterly production up 60% at an average realised price of 109 Aussie dollars a pound, with the cost of drum uranium for the quarter at $36 a pound, which did come in below guidance. FY26 guidance at Honeymoon is for 1.6 million pounds of uranium and all-in sustaining costs of between $64 and $70 a pound, and is expected to generate free positive cash flow. It says it has $224 million of cash and liquid assets on hand and no debt. It's also announced that its Managing Director and Chief Executive Duncan Craib will step down at the end of September to be succeeded by current COO Matt Dusky. So, Francesco, in fact I saw Ords you had earlier downgraded to hold from buy. Because the high sort of short positions in the stock anyway, but it's now back to where it was in those April lows.
Yeah, so we recently downgraded to a hold, and then today's come out with this downgrade. So I would anticipate that they will sharpen their pencils again overnight, and maybe there'll be a change in recommendation, or maybe they'll keep it as a hold. I'm not too sure whether they'll see value there at 201. Obviously they'll have to adjust their price, uranium price numbers. They were guidance of $64 to $70 a pound. Consensus was coming in at 51 a pound, so they're well below their guidance on that. That's going to have a severe impact on it. Look, when stocks like this are going through some sort of, I'd say turmoil, I suppose, with their numbers, I'd probably just steer clear of it if I don't own it and just watch. But if there's more weakness in that share price, then there might be some opportunities ahead, depending on how bad the operation is at Honeymoon. I'd keep a close eye on it, but at the moment I'd say if I own it, I'd probably hold now, continue to hold. If I don't own it, I'll watch.
Mathan.
Yeah, look, obviously it's the uranium exposure. Uranium is in play with US techs looking for data center and AI energy needs. Nuclear power is getting that play. So there is a play in that, and they've got exposure into Northern America, so that kind of helps them. Here, the producers were Paladin and Boss, and we've been in Paladin, so we like the thematic. There's a few things. There's a bit of a cost worry. Now, that shouldn't be a real worry because it's inflation, and we've heard it from every miner that's come out. Costs are going up, right? So that should be expected. The outlook guidance was a bit of a worry, and you got management change, so that panics the market. And you know what? When you're a top 5 shorted stock in the market, funnily enough, when this happens, you get smacked the most. And yeah, you've been smacked. So if you're there, look, I'd be saying hold on, because I don't think, if they were geared up and the thematic for the commodity is bad, then you dump and run. Because they get into real trouble. But in this one, I think the commodity is doing all right. The thematic is still positive. Operational issues, you can't forecast that. And costs are going to go up everywhere. All miners are telling you that. So that play, we're in Paladin, and that hasn't been an easy ride either. It's volatile in this sector.
I think some of those shorts got covered just recently.
Well, they were
went from 26 to 14 before this.
Yeah, well, they were 25-26%.
Yeah,
and got down to 15%.
Yeah.
And so
So they've covered it before this fall, unfortunately.
Yeah, but it's still 15%. I mean, the reality is when you have shorts that more than 10 to 15%, you just can't get out of it, right? So these are the events that they can get out of it. So I'd expect more covering to come through this. So it should, over
So what do you expect, a little bounce in the stock?
You would think over the next couple of days, the short coverers will come in. Because when you're holding that, apart from the business going bust, you really can't get out of those kind of shorts.
No. Unless you think there's something a little bit more systemic that might last a bit longer.
Yeah, and given the thematic in the uranium sector, I think you've got to take these opportunities to cover some of the shorts.
Yeah.
All right, well, there we go. Boss, if you're in it and you've seen that stock plunge some 43% in this morning's trade, both our experts would hold on. That is our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.